Assalamualaikum warahmatullahi taala wabarakatuh. My name is Muhammad Hafiz bin Fatah, metric number 1190842. Our group chose Takaful Ikhlas Berhad for this group assignment. To begin with, Takaful Ikhlas Sendirian Berhad was founded on September 18, 2002. Takaful Ikhlas concept and decision all are based on Syariah principle. MNRB Holdings Berhad owns 100% of Takaful Ikhlas Berhad. Takaful Ikhlas Berhad announced the split on the 30 November 2018 to manage its family and general Takaful operation independently. Takaful Ikhlas Berhad has been renamed as Takaful Ikhlas Family Berhad, or known as Takaful Ikhlas Family. Meanwhile, Takaful Ikhlas General Berhad is in charge of the company's general Takaful activities. Next is Takaful Ikhlas is Malaysia's second Takaful cooperation, created in 2002 after the Takaful Malaysia that was established in 1981. Next, we move to the general performance and future prospect. Takaful Ikhlas contributed significantly to the MNRB Group's net earning in 2020, with a net profit that climbed by 82.5% from 35.4 million to 64.6 million in the previous year, due to the company development, higher investment income, and cost-cutting efforts. Takaful Ikhlas was ranked at a second place in the Branding Malaysia Family Takaful Award in 2019-2020 with 80 points behind Etika Family that was ranked at first with 86 points. Moreover, in 2021, Takaful Ikhlas performance in gross profit, investment profit and others measure improved dramatically. Takaful Ikhlas may grow in the future as individuals relies more on the value of Takaful insurance rather than conventional ones. For example, a health insurance plan with medical benefits is helpful and wanted by everybody since it provides a financial safety net in case of a medical emergency.
So, bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. So, next, let's talk about the business model or business contract that practiced by the Takaful Ikhlas. So, Takaful Ikhlas use wakalah model or wakalah contracts in their business operation in offering their Takaful product and service to participants. So, in general, when we talk about the wakalah model, so wakalah model is a contract which one party, as principles, permits another party as his agents to fulfill a specific works on subject that may be delegated with or without payments. So, when in the company frameworks, we can say that Takaful Ikhlas has been appointed by participant as an agent to conduct Takaful business, and wakalah fee or ujrah fee has been agreed to be paid to the Takaful Ikhlas, which is the fee is payable from the Takaful contribution paid by the participants. So, Takaful Ikhlas will help managing and investing the contributions of their participants in exchange for a predetermined fees. So the profit and advertising supplies, if there is any, will be delivered to all participants as totals. So under this wakalah models, management expenditure also can be charged to the Takaful fund as upfront charges, and the operator or Takaful operator, or which is Takaful Ikhlas, also will earn its revenue from the agency fee as well as return on the investment of shareholders' funds. So meanwhile, in terms of the event of a cancellation or revocation of the contract or agreements, so the participant will be refunded of the next balance of his contribution, if any, after deducting all the upfront charges such as wakalah fee and other management expense from the Takaful funds. So therefore, because the costs are specific and predetermined by both parties, so wakalah model is, we can say that wakalah model is more transparent than the other Takaful models, and also wakalah model also widely used by the Takaful company nowadays. So that's all we can say about the wakalah models. Okay, next, we will talk about the challenge or issue faced by Takaful Ikhlas and also their plans in the future to overcome this issue and challenge. So first, let's talk about the challenge. So first of all, there are certain concerns with the wakalah concept, such as the fact that wakalah fee imposed on participants are excessive, causing a hardship to the participants. So this issue arises from the fact that wakalah fee is charged two times, which is during wakalah fee on distributions and during wakalah fee on the value of investments. So this compilation arises because the Takaful class will charge the fee as upfront fee while still receiving a profit portion as the mundari, which is demonstrate that Takaful is more concerned with the profit rather than to help the participant in their life. And also there is another issue related to the performance fee incentive paid for the operator, Takaful operator. So in this matter, Takaful class refer to Bank Negara Malaysia statement, which is said that for wakalah contracts product, a fixed upfront fee might be imposed on the contribution based on the contractual term entered with participants. So the contractual parties may agree to a fee that is not included in the initial agreement, which is we call it performance fee. So the performance fees could be in the form of amount in excess of a certain amount for the allowed tax. So in addition, the wakalah fee charges is also used to cover commissions and management costs associated with the Takaful fund management, which is mean it give no indication of the prohibition on charging the wakalah fee more than once. So simply we can say that as long as wakalah model operation complies with the Bank Negara Malaysia and Islamic financial standards, this product is generally compliant with the Sharia, and also Takaful Ikhlas did not have any problem offering the product based on the wakalah models. So moreover, in order to overcome this wakalah issue in the future, Takaful Ikhlas also plan to enhance participant confidence in continuing to contribute to Takafuls and constantly maintain participant trustworthiness by having a good Sharia governance frameworks and also assuring all the business operation comply with Sharia principles. Takaful class will always refer to the Sharia advisory councils when to make any decision related to the business product, Takaful product offer, and ensure that regulation and procedure regarding the application of wakalah are enforced. Moreover, Takaful also plan to ensure enough information will be closed to participants to increase more their transparent in business operation and also the trust from their participants. So that's all about the challenge and their plan, Takaful class plan in the futures.
Now, I will talk about product offered by the Takaful company in context of family Takaful. In general, the main type of family Takaful product offered by Takaful Ikhlas are ordinary products such as health protection, education, and mortgage or credit. For health protection product, Takaful Ikhlas has introduced Ikhlas Basic Critical Illness Takaful to give protection if the person covered is afflicted with a serious disease such as stroke, heart attack, or cancer, and is only open to participants between the age of 70 and 55. Some of the important notes that need to be known by the participant that for all direct critical illness products supplied by the company, and the maximum amount of the sum covered payable shall not exceed RM100,000 per illness, and the Takaful participant and the person covered must be the same person. Furthermore, the Takaful participant can purchase additional coverage in the Ikhlas Basic Critical Illness Takaful, basic coverage such as the Cancer Rider and the Ikhlas Critical Illness to secure the Takaful Rider and provide them with more comprehensive protection. Besides that, there is also the Ikhlas Basic Hospital Income benefit Takaful which provide a daily hospital income benefit which in the intensive care unit ICU and daily income benefit if the person covered is hospitalized for some circumstances and is also open to only the participant in the range of 17 and until 55 years old. The participant can also get the Ikhlas Hospital Benefit Secure Takaful Rider as additional coverage for this product. For Takaful contribution, both Ikhlas Basic Critical Illness Takaful and Ikhlas Basic Hospital Income Benefit Takaful required the participant to pay varies depending on the plan they choose, their gender and age at renewal, and participant also attached with a few fees such as wakalah fee and Takaful certificate charge and the instatement fee. Next, for the mortgage or credit product, Takaful Ikhlas has offered two types of product. Firstly, Ikhlas Mortgage Reducing Term Takaful, which will provide coverage to pay the prevailing sum covered to any institution master certificate holder in the case of the participant death or total and permanent disability, and Ikhlas Group Credit Term Takaful, which will assist participant in repaying outstanding personal loans and easing the financial strain on the families when the participant face calamity strike, death or PD. Depending on the amount of finance obtained, the total Takaful contribution for both types of product that participant must pay varies. Other factors including age, career type, and prior medical history also influence the amount of the contribution. This mortgage and credit product also require the participant to pay a wakalah fee, commission, and stamp duty. The total amount that the fee can be referred to in the Takaful Ikhlas product disclosure sheet. Let's move to the next, which is Takaful Ikhlas also offer Ikhlas Education Takaful Plus, wherein under this plan, the person covered will be rewarded for their outstanding academic performance in UPSR, PD3, SPM, or STPM. This benefit is only available if the Takaful certificate has been valid at least for 3 years. Last but not least, in saving Takaful product, Takaful Ikhlas has offered two products. The first is Ikhlas Saving Private Takaful, which comprise the element of saving and individual Takaful protection, which is the benefit that can be gained of buying this plan is that it will cover natural death or total and permanent disablement, accidental death, and death or TPD caused slowly and directly by accident while travelling in public conveyance or as a victim as an act of crime, which all the three matters will be covered by an amount of Rm 100,000 ringgit. In terms of saving on maturity, the Takaful participant will receive investment income from the participant investment account or personal risk investment account, as well as any net distributable assets from the risk fund. And the second plan, which is all about Ikhlas Wanita Elegance Takaful, which aims to give protection against death, total and permanent disability. About the female specific cancer and other female illness before the Takaful certificate mature. Specifically, the participant will get protection such as facial reconstructive surgery and breast reconstructive surgery due to an accident, skin grafting due to burst or cancer, loss of female reproductive organ due to an accident, and the maternity and the living benefit. Both two plans also attach the participant with the wakalah fee, commission tabarruk charge, surrender charge, and stamp duty charge imposed on each Takaful certificate.
In Chapter 3, also discuss about the general Takaful that had been offered. To start with, one of the general Takaful product is Motor Takaful. Firstly, the Ikhlas Comprehensive Private Automobile Takaful, which covers the participant's car in the event of accident causing bodily injury, death, or property damage to a third party, and 24-hour roadside assistance. And then there's the liberalization of motor and tariffs, which lets Takaful provider use their ways to determine the Takaful payment and coverage supplied to customers and certificates holders. This means Takaful provider can charge Takaful payment based on the client risk profile. Thirdly, the Ikhlas Private Car Comprehensive Plus Takaful provides the same coverage as the Ikhlas Private Car Comprehensive. However, with additional benefits including waiving mandatory access for nameless driver, providing free personal accident insurance for participant, and refunding transportation costs. Finally, Ikhlas Motorbike Takaful covers own damage including damage to or loss of a participant motorbike due to the burglary, theft, or other malicious action. Furthermore, the second type is the Ikhlas Fire Takaful that protects participants' property from loss or damage caused by fire and lightning. The donor can cover hazards with additional Takaful contribution including storms, floods, impact damage, and water pipe burst. The firm does not offer marine takaful, liability takaful, fidelity guarantee and bonds, aviation takaful, and or other accident. Moreover, Takaful General Berhad also offer personal accident coverage. It offers death and permanent disability for immediate death or burial expenses and also hospital expenses. Next, the Ikhlas PA Permata Takaful, where participants can claim up to 300,000 for an unintended death in a public vehicle. Besides that, the insurance includes an 100,000 ringgit permanent disablement allowance and 300 per day hospital allowance and 500 ringgit ambulance charge. Third is the Ikhlas PA Perdana Takaful that also covers the same risk. Lastly, others Takaful General Berhad include Ikhlas Home Protect Takaful, which the hazards covered includes fire, lightning, explosions, flood, breaking water pipes, and other perils indicated in the Takaful certificate schedule. Furthermore, Ikhlas Retail Niaga Takaful that covers small and medium enterprise (SMEs) such as supply store, mini marts, tailor, small workshops, and contractors. Public liability, plate glass, employer responsibility, and group personal accidents are all covered. Aside from clinic and dental office, Ikhlas Klinik Niaga Takaful covers medical officers, doctors, and general practitioners that manage comparable enterprise, comparable to Ikhlas Retail Niaga but extensive hazard, which is known as non-movable property.
Bismillahirrahmanirrahim. Now we proceed to the chapter 4, which is Takaful performance based on the annual report. First of all, under the performance of Takaful operator, it has a underwriting ratios. They divide to the loss ratio, which is the loss adjustment divided by premium earned. The loss ratio is the percentage of premiums generated that an insurer losses owing to paid claims. A high loss ratio might indicate financial difficulties, particularly for a property or casualty insurance firm. To quantify overall cash outflows linked with their operational activity, the insurers will compute their combined ratio including the loss and expenditure ratios. From the table above, we can see that the loss ratio for the general Takaful is increased from year 2016 until 2019 and decreased to year 2020. The lowest value for the loss ratio is 0.053 and the highest ratio is the 1.77 in the term of the ratio below. Second, the loss ratio for the family Takaful show the increase from 2016 until 2020. The lowest value for the 2016 is 0.43 and the highest one is the 5.86. And the loss ratio for the total of general Takaful and the family Takaful show the increase from 2016 until 2019 and start to decrease from 2019 until 2020. Accordingly, we can see that the lower value of the ratio for 2016, which value is 0.47, and the highest value is 5.32. So we can summarize that the factor that affected the loss ratio in the change is the change in the loss adjustment and premium earned. Now we go to the expenses ratio and expenditure ratio, also known as the management expense ratio (MER). That's quantify how much of a fund's assets are spent for administrative and other operational costs. From the table above, we can conclude that the expenses ratio for the general Takaful increased from year 2016 until year 2020. The lowest value for the loss ratio of the general Takaful is 0.71 and the highest value is 2.43 for the general Takaful. The expenses ratio for the family Takaful, we can see that the lowest ratio is 0.2491 and the highest value is on 2018, carrying on the ratio value of 0.59. And the total of the expenses ratio for the general and the family takaful are 0.3159 for the lowest, and the highest is the for 0.6654. Lastly, we can summarize that the factor that affected the expenses ratio is the change in the underwriting expenses and the net premium return. Next, we go to the combined ratio, which calculate the amount of that leave an insurance firm in the form of dividends, costs, and losses. The combined ratio is the addition of the loss ratio and the expense ratio. From the table above, we can see the trend of the combined ratio for the general takaful is increased from 2016 until 2019 and decreased for 2020. The lowest value of the combined ratio for the general takaful is 1.49 and the highest is the 4.21. Secondly, the combined ratio for the family takaful show the increase from the 2016 until 2020, and the lowest value for the family takaful is 0.6844, and the highest one is the 6.3567 for the ratio value. So for the total of the combined ratio for the general and the family takaful, we can see that the lowest value is 2.1832, and the highest one is a 10.4861. So we can conclude that the factor that affected the combined ratio is the change in loss ratio and the expenses ratio. Now we move to the ratio of the net return premium to policyholder surplus. This ratio measures the level of capital surplus necessary to write premium. An insurance company must have an asset-heavy balance sheet to pay out claims. Based on the table below, we can see that the ratio of the net return premium to policyholder surplus from 2016 until 2020. For the year 2016, the ratio is 2.51, which is the surplus exceed the liabilities. 2017, the ratio is 2.35, is slightly decreased from 2016 but still exceed the liabilities. From year 2018 until 2020, the ratio are 1.41, 1.07, and 1.20 that overall played for above 1 ringgit. In the conclusion, the year 2017 is the highest ratio, representing 2.35, while the lowest is 1.07 for the year 2019.
Next, we move to the profitability ratio. In this ratio, we have 4 types of ratio, which is return on revenue, return on asset, return on equity, and investment yield. Firstly, the return on revenue ratio is a measure of a company profitability that is calculated based on the amount of a company revenue generated. For general takaful, we can see that the highest ratio is from 2019, which is 0.20, and the lowest ratio from 2018, which is 0.08. We move to family takaful, which is the highest ratio is 0.09, which is from 2018, and the lowest ratio from 2016, which is negative 0.20. And the total ratio for family and general takaful is the highest 0.09, which is from 2018, and the lowest is from 2016, which is negative 0.10. From here, we can see that for the total ratio from 2016 to 2018, we see that the trend is increasing, and from 2019 to 2020, the trend is decreasing. Secondly, the return on asset ratios of a company is a measure of how profitable it is about the total amount of its assets. For General Takaful, we can see that the highest ratio is from 2016, which is 0.07, and the lowest ratio is from 2018, 2019, and 2020, which carries the same amount of 0.03. Next, for family Takaful, we can see that the highest ratio is from 2018, which is 0.02, and the lowest ratio is from 2016, which is negative 0.05. Next, for the total ratio for family and general Takaful, we can see that the highest ratio is from 2018, which carries amount of 0.02, and the lowest ratio is from 2016, which carries negative 0.03. From here, we can see that from 2016 to 2018, the trend for the ratio is increasing, and for 2019 and 2020, it is the same, no any change. Thirdly, the return on equity ratio is a financial performance indicator calculated by dividing net operating income by the average common equity. The higher the return on equity, the more profitable the company has become, and the possibility of enhanced dividends to shareholders. So, the total family and general Takaful. The ratio for 2016 is negative 0.30, for 2017 0.02, 2018 0.26, 2019 0.08, 2020 0.04. From here, we can see that the highest ratio for this 5 year is 0.26, which is from year 2018, and the lowest ratio is from 2016, which is negative 0.30. From the data, we can see that from 2016 to 2018, the trend for the ratio is increasing, and from 2019 to 2020, we can see that the trend for the ratio is decreasing. The last ratio for profitability ratio is investment yield. Investment yield is the return received on a Takaful company's asset. The investment yield is calculated by dividing the average investment asset by the net investment income before interest and tax. For general Takaful, we can see that the highest ratio is from 2019, which is 75.77. The lowest ratio is from 2018, which is 25.27. For family Takaful, we can see that the highest ratio is from 2016, which is 24.71, and the lowest ratio is from 2019, which is 23.44. For the total of family and general Takaful ratio, we can see that the highest ratio is from 2019, which carries amount of 25.77, and the lowest ratio is from 2018, which is 23.79. From the data, we can see that from 2016 to 2018, we can see that the trend for the ratio is decreasing, and from 2019 to 2020, we can see that the trend also decreasing. From 2018 to 2019, the trend is increasing.
Now, I will show to you the performance of the Takaful product, which is table of the total asset for the Takaful Ikhlas. From the table above, you can detail the expansion in total asset of Takaful product, including the family and available and general product from 2016 to 2020. This shows good signal to Takaful Ikhlas, which can enlarge the company size, which is positively related to the financial performance of general Takaful companies. An increase in total asset of an available Takaful company leads to a parallel increase in his investment income. On the contrary, the percentage rise of the total asset fluctuates from year to year. Even still showing slight growth in the total asset, for example, the percentage of total asset for family product increased 12.85% from 2016 to 2017, while in 2017 to 2018, they had only 7.66% rise in total asset. In the next year, in 2019, we should get the 9.77% in the total asset, and for 2020, only get a slight incline, which is 5.9%. This shows the fluctuating rate in the tangible asset growth in Takaful Ikhlas. Besides, the percentage for general product also shows undulated percentage from year to year, starting with 2017, increasing 13.92 compared to the total asset in 2016. Even so, the rising rate dropped by 2.08% in 2018 and went up a little bit to 3.12% in 2019. While in 2020, the percentage climbed to high as far as 16.32% of the percentage total asset compared to 2019. In addition, to explain the factors that play a significant role in determining the total of available product, which is the finance asset and the Takaful certificate asset for every year since 2016 to 2020. For your information, the highest total of financial asset in year 2020, which contained the amount of RM 493,000.8 billion and the Takaful certificate asset amount of RM 193.4 billion. This amount of financial and other assets is gained from the unquoted sukuk, government investment issue, and from the Islamic instrument accounts from the Islamic bank. While for the Takaful certificate asset acquired from the provision for claims reported by certificate insiders produce the claim liabilities. Besides the family product, the highest total affected total asset in the family product are financial asset and investment properties. The most significant volume of financial asset is in the year 2020, which contained RM 3.31 billion that has been obtained from unquoted Islamic private debt securities and government investment issue, and also in the amortized cost and other assets. This shows Takaful Ikhlas as a large company can enjoy better investment opportunities dependent upon many factors such as reputation, size of asset, business relation, active trading, and partnership. To conclude about the Takaful Ikhlas Berhad is a well-known Islamic insurance firm operating and developing in Malaysia for the past 19 years. This company development is progressively increasing year after year because Malaysians are becoming more aware of the benefit of Takaful insurance product over conventional models. Takaful Ikhlas Berhad also had a brighter future since their gross profit, investment profit, and other indicators improved significantly. Furthermore, based on the finding of this research, we established that Takaful Ikhlas solely use the Wakalah business model, in which the participant pays an incentive fee when purchasing the firm insurance product, and the company acts as an agent to mitigate the risk of loss for the participant. Some model challenges have also been mentioned, such as an excess fee charged twice to participants. To elaborate further, Takaful Ikhlas Berhad provided a wide range of family and general goods. Several sorts of family goods are available, including health insurance, mortgage, education, and saving. On the contrary, for the general Takaful Ikhlas also include the motor, fire, personal accident, and other sorts. In addition, to conclude from the performance of Takaful operator, for the loss ratio, the Takaful Ikhlas company can operate the frequency with which losses are incurred. That is still an acceptable loss ratio in the range of 40% until 60%. From our observation, the loss ratio that has been faced is in the field of 35% until 53% in the year of 2016 until 2020. While for the expense ratio, Takaful Ikhlas is doing good in controlling to be not overspent in the expense ratio, which is the percentage is below 70%. As well as that, Takaful Ikhlas manage well the combined ratio that is still above 100%, which means a ratio below 100% indicate this company is making an underwriting profit continuously, and the decrease of the return on equity of Takaful Ikhlas show this company becoming less efficient in creating profit and increasing shareholder value. Even so, Takaful Ikhlas need to keep asset costs down by monitoring the asset expenses monthly and reducing inventory costs by managing inventory levels to reflect the sales and expectation. Last but not least, Takaful Ikhlas always need to work well of all of their income and expenses to be the top insurance company in Malaysia. And that's all from me and us. Thank you.